So you want to know how to find those hidden gems using only price action secrets, using only price action. Been doing this for 30 years. And the big thing to understand about stock markets is it's a 50-50 game. No matter what system you use, no matter what strategy you try and use, it's always going to be a 50-50 game. I'll explain that to you in the video. And we're also going to go to the charts and we're going to have a look at a system that'll give you a high probability trade, which will be the price action system. And I'm going to show you how to trade with price action. But after the charts, I'm also going to take you and I'm also going to show you the strategy that will make you profitable in the stock market. Hey, for those of you who don't know me, I'm Rob, and for those of you who do know me and are well subscribed to the channel, welcome back. It's good to have you back. Let's talk about price action today. But first, it's coffee with Rob, so let's have a sip of the old coffee. Maybe my voice will sound better. Maybe it won't. Who knows? We'll see how we go today. We'll see how this all works out for us. Now, the big thing is, guys, price action is straightforward, basic, simple trading. You don't need to have all these fancy, fandangled, wonderful abbreviations, systems, things that you learn on courses. It's so straightforward. It's pretty unbelievable. But people come back from their courses, or people come back from these training things, or they believe themselves to be these fantastic fandangled traders when they've learned a high probability system in the market. They come back with a whole bunch of abbreviations and a whole bunch of information on the markets, but then they can't trade. And they become a losing trader. And they wonder why. They wonder why they learned this fantastic, marvelous system, but they still can't win in the market. And that's what I'm going to explain to you after the charts. And the main reason behind it is, guys, that the squiggly lines don't make you the money. Squiggly lines don't make you money, guys. Behind those squiggly lines is traders, people buying and selling. And every buyer and seller in the market wants to win. Absolutely everyone wants to win. Nobody wants to go into the market to lose. Nobody invests in the stock market, whether it be for 5 minutes or 5 years, to lose. Everybody wants to win. So you come along and you think that you're now suddenly going to have a high probability system that's going to give you some win rate of 7 out of 10, and you're going to beat all the pros. Now, the first thing you have to understand about me if you're going to watch my videos is that I don't believe in a win rate. In fact, a win rate doesn't make you money. It'll never make you money. It'll give you something to boast about, but it'll never make you money. Win rates don't make you money. Strategy makes you money. You can have any win rate you want. If you win 7 trades and you make $10 on every trade, and on the other 3 you lose 100, you've got a problem. You've got a serious problem. You're not winning in the market. You lose 100 per trade on the other 3 and 10 on the 7. You're going to make 70 and lose 300. It just, the maths doesn't compute. But the stock market is not about maths and exact AI and that type of thing. The stock market's a very subjective place. It's not as objective as what you think. You think it's objective. You think it's all maths. You think it's all bots and AI. If it was that easy, I could invent a bot for you right now with a system, make it run, and it would make an absolute fortune. But then why don't they? Then why aren't the pros using these bots? Then why aren't you using this bot to make you millions? Because seemingly, according to many people, the stock market's objective. It's very mathematical and it's all about algorithms, and they're searching out your stop loss and they're searching out your orders and all these different funny kinds of things. Guys, don't forget to join as a member, by the way, and then get the trade of the day every day. It supports the channel. It's good for the channel. And I also offer you a free Forex book down there. And there's discounts on the Funded Trader accounts if you want to join us for the live shows and trade with us on that Funded Trader account. We trade it together, we swing trade it together, and we learn about trading every Tuesday and Thursday. Tuesday, I do it in the Euro sessions. Thursday, I'll do it in the US sessions in the afternoon. We get together as a group and we talk about trading. Come and join us and come and trade with us. What we do, we have a little Funded Trader account, which we have open, and you guys choose the trades and we put it on there and we trade with it and we see what happens, man. And we have a bit of fun together. It's all about education. It's all for you guys to learn. Do you know what? It's all totally free. But anyway, I just thought I'd bring that up for you guys. And also, if you wanted a funded account, there's a link in the description for that as well. Now, I'm going to take you to the charts and I'm going to show you a system, a high probability system that'll help you with price action. It'll show you how to trade with price action. In fact, it's the secret to winning with price action. But just understand me when I tell you this. You have to watch what I tell you after the charts, because the system is not going to make you money. It's going to give you a high probability trade like all the other systems do. It's going to give you a good chance in the market, and it's going to help you to understand price action. But if you want to win in the market, if you want to become profitable in the market, you have to listen to my strategy after the charts, and I'm going to show you how to approach the trading properly with the correct psychology and actually try to make money in the markets. Let's go and have a look at the charts, and we shall take it from there. Right, you want to know how to trade with price action. And price action is basically simple support and resistance, or trend support, trend resistance. And I'm going to show you that today. I'll show you how easy it is to trade with that. Guys, trading is risky. Note, trading is risky. In fact, around 60 to 80% of traders do lose money. And if you don't like losing money and you don't like risk, you really shouldn't be trading. In fact, on day trading, on the 5-minute time frames, 99% of traders do lose money. So just keep in mind that trading is a risky game. Don't overlook that. Don't forget that. Putting that behind us, let's go and have a look at how we can trade with a little bit of price action and what to do. So this is the US 500. Now, this little account is for our live shows on Tuesday and Thursday. The guys who come on the live shows and the members, they trade this account with me, and the guys choose the trades, and we trade together. And I will manage it. I'll add to it as well. If I see something, we'll grow this account together. It's a little bit of fun. It's a little bit of a get-together. So if you want to join us in the live shows, please do. Every Tuesday, every Thursday. Tuesdays, the mornings here at 9:30 GMT +2 in South Africa. And on Thursdays, it's 2:30 GMT +2. Okay, so how do we trade price action? What you've got to do is you've got to look at your trade. This is the US 500, and we're on the 4-hour. Now, if you look at this 4-hour chart, clearly we had the head and shoulders. It came back, it didn't break the head, so we got another shoulder effectively. It's come back, hasn't broken the head, looks like it wants to go down. So there is a bit of a trend resistance here, which is preventing this from breaking to the upside at the moment. Doesn't make it bearish. It was a very bullish run, but you do have a situation here of it's in this range. Will it go out? We were breaking the range at this level, and then it came back. So now how do you trade this, and what do you do with it? First thing you've got to do is take it to the day. So we take it to the day trade. Once it's on the daily level, then you have a completely different picture, and you are trading on more reliable information. The lower you go with the time frames, the more unreliable the information becomes. The next thing you want to do is you want to trade it on a line chart, or you want to put your support and resistance in on a line chart. And support and resistance, I'll draw the support and resistance in. What I'll do is I'll always use a rectangle. The reason I use a rectangle is because a resistance is an area. It's not an exact spot. It's not like it gets to a wall and it says, oh, I'm not going further than that, and then it bounces off the wall. These are human beings putting orders in the market, and that's what creates a resistance area. The price gets to, every time the price gets to there, it gets pushed down because there's money in that area pushing it down. And what your scenario is, you're thinking that's an area that the price doesn't like to go past. It's an area that the price likes to get to and then come back. Then we're going to draw the support area in, which is lower down. So there's a low, there's a low. An area where every time it reaches that area, now here's an area where it actually broke through that support. So we'll draw that in. We will draw that in, and we'll draw it in as the support. We could also draw the support in further down here and say that this is the actual support here. And I would actually do that. I would actually say, you know what? The actual support is much further down. You know, we think it's here, but this was a resistance area that it reached. It was struggling to get through, and it came down to the support area, bounced. It went through that resistance area straight up, came back to that area, and then continued on up, creating a bit of a support here. And we can actually draw it in just so that we know that it's there. So it has created that support there, but that's not your main support. That's an area where the resistance literally broke through. You see it broke through there and turned it into a support. It did break through, and I actually thought, well, here's a good short trade all the way down, took it, and it actually took me out, went back through that. Now, the other thing you want to do is you want to just take a trend resistance and just put it in here just to say, hey guys, and if it touches 3 or 4 points, that's perfect. If it goes through that, it's long. You need to know that. If it goes through that, it is long. So that's what you're looking at, and that's what you're determining at the end of the day. There are obviously trends going this way as well because it's in a bullish trend. So you can put your bullish trend in here as well. I'm not going to draw too many lines in just for the moment. Now what you want to do, you want to put it back to the candle charts. And the reason I use candles is because when I see a green candle, I know it's going long. And when I see a red candle, I know it's going short. And if there's a red candle coming out of resistance, then I know that it's going short. If there's a green candle coming out of support, then I know that it's going long. Now you have your day. Now you take it back to your 4-hour chart, because your 4-hour chart is going to give you a lot more information. Well, a lot less information, but a lot more to trade with. Right, now, here's the point where it broke through, and that was a classic sell. So you take the sell, doesn't reach your targets, shoots back up to retest. You think, well, it's retesting, it'll go down from there. Doesn't go down, comes back up, some kind of good news, shoots it straight up, and you land up taking a stop loss. You put your stop loss here where you can see the trade's invalid. Then you know, trade's invalid, that's your stop loss. Let it take it. Now what we've got is a scenario where we've drawn this trend resistance in. And why do I draw it in on the line chart? Because on the line chart, you're drawing it in on closing prices. Whereas on the candle charts, you're drawing it in on highs and lows. And you don't actually want to do that. So now we've drawn that trend resistance in. So now we know if it hits this trend resistance, there's one of two things that can happen. It bounces down and it goes down again, probably goes down to the support, maybe bounces up or breaks the support and heads on down to the lower support, which we drew in, the main support down here. That's the biggie. Or it breaks through this trend resistance, gives you a green candle and goes to the upside. That's as simple as it gets. If it breaks through the resistance here and gives you a green candle to the upside, that's long. If it breaks through the support here or here and gives you a red candle to the downside, that's a short. Now, how do I know if this is going to be a short, if it comes down off of that line? Because it's happened before and then gone straight back up, or it's happened here and gone straight back up. So you never can be 100% sure. So what you do is you take a trend line. I don't want to draw too many lines and too many things on the chart, but this is what you do. Take a trend line, you draw it up there. If that price breaks through there, then it's probably short and you can take the short trade. As simple as that. You just get confirmation with it. I mean, this is it's on the same time frame. It's just a bit of confirmation. You can effectively just draw the line there and take it. And if you know anything about supply and demand, you'll see there's a supply level sitting right here below the support. So it could come down to 58.40 to take some money and go back up. But now you know that if that breaks through that line, heads on down, then that is it. This is just a high probability system. This is not what's going to make you money. This is just a high probability trade. And that's all you're looking for. You can take any trade and you can look at it and say, how's that going to work? How's that going to work out for me? Is that going to do the job? Euro, US dollar, we're short on it because it's in a bearish trend. Taking the short. It is going against us a little bit, but it's no big deal. This thing is going short, should carry on going short because it's in that trend. The US dollar, Canadian dollar, that one's working out for us. It is long, it's in that trend. And when it breaks this, then we'll get out. If it breaks that line and starts going the other way, then we'll get out of that trade as well. We'll see how we go. But I'm hoping it'll continue on its trajectory and keep on going to the upside. And that will be the win. Okay, so that's basic price action systems. If you want to know more about price action systems, I've got so many different videos on it. Just go to the channel, just go and grab them, go and have a look at them, and I explain it a different way every single time. Okay, so you've been to the charts, you've seen the charts, now you know how to trade with price action. So let's have a sip of coffee. And then let's go and talk about strategy. Probably the most important thing you're ever going to learn in trading. Because do you know what? Nobody tells you this. Well, very few people tell you this. Very few people will tell you this. You'll go on a course, they'll teach you that system, which you just saw on the charts, or any other system, or many other systems. But what they won't teach you is that you need the right approach and psychology to go and trade and be successful. Because while you were on that course, while you were learning how to trade, you were on a demo account and it wasn't real money and you learned all the abbreviations and it all seemed easy. Because at the end of the day, learning to trade the squiggly lines or learning to trade a system, that can be done by a primary school child. That's easy. That's not the difficult part of trading. The difficult part of trading is trading with real money and getting your psychology right around your trading. That's the difficult part. That's the part that's going to turn you into a losing or a winning trader. That's what nobody tells you. The minute you get home from your course and you know everything and you've done this huge file and you've done this book and you've practiced and you know you're a winning trader, you come back and, oh, this is easy. And you go and take real money, no matter how much it is. It can be $1, it can be $1 million. It really doesn't matter. You go and put it in the market and suddenly you start sweating and you start thinking, what happened? What's going on? Why am I shaking? I don't know what to do. Yeah. Some of you might recognize that. Some of you might have experienced that in the past. Some of you maybe don't have that fear receptor in your brain, but I don't believe that every human being ever has always had that in their brain. There's a fear that kicks in. It's like in the old days, it would be to protect your family, to protect you against the saber-toothed tiger, so on, so on, so on. But now it's all about your wealth and finance and your economy and supporting the family and whatnot. So if you can't go to sleep at night because you've got a trade in, that means you've either overtraded or you haven't got your psychology around how you're trading. So I've got a simple system for you that's going to work for you, a system that I used for 30 years. And well, it's not a system, it's a strategy. And it's a simple business plan. A simple, easy, two-step business plan that you can use. You don't have to write it down. You don't have to make a list. You don't have to read a book. There's no book. I haven't written a book. There's no book, guys. If you want a free Forex book, there is one in the description, but that just gives you a system and tells you about trading. There's no book from me that teaches you a strategy or anything like that. I haven't done any of that. I'm going to tell you the strategy right here, right now. I don't think I could write a book on it because I mean, it's a simple two-step strategy. Let's be honest. Anyone can learn this. The difficult part is applying it. Will you be able to apply it? Because you take two traders, put them in one room, you'll achieve two different results. Simply because their brain works a different way. They're wired differently. They think differently. But here's the strategy, guys, and it's very simple. Take the size of your account. Now, I normally teach people by using the round figure of $100,000. And the reason I do that is because it's round figures. We could use the $25,000 account and then it just gets complicated. And I'm just going to use a $100,000 account as a simple base, okay? So that you understand the concept, because percentages are easy to work out when there's ones and zeros. You can have a $5,000 account. You can have a $50 million account. I don't care. I just want to give you the principle. The principle is this. You want to lose less and win more on every single trade because the market's 50-50. Those of you who don't believe the market's 50-50, just sit down, think about it, work it out, ask yourself why all the other traders in the market will let you have more wins than them. And then come back to me and then we'll talk about the 50-50 again. Because if you think the market is all about sort of some algorithm math thing, whatever, then you've lost the plot. Sorry to say. The market is subjective. It's about human beings. And the sooner you understand that, sooner you'll start making some money. How do we do that? How do we start making some money? Well, to start with, you've got to keep the stop loss the same on every single trade you take on that account. You might have different accounts and you might have different account sizes, but on each individual account, you want to keep the stop loss the same on every single trade. Now, I recommend normally a 1% risk on every trade, 1% of the account. So on a $100,000 account, that would be $1,000 on every single trade. There are those that have got higher risk thresholds that might want to take a 10% risk on every account, or 5% risk, 2% risk. There are those with a smaller risk threshold that might want to take 0.5% risk if they can. Now, the difficulty, of course, is taking the same risk on every single trade. You'll say, but yeah, no, the stop loss will be in different places and it's going to knock me out. And that's where people's psychology get it wrong. You think you have to put the stop loss in the wrong place because you're putting a specific dollar value on your stop loss. But you've got to think the other way around. What you got to do is say, my stop loss is $1,000. It doesn't have to be exactly 1,000. It can be 1,010. It can be 950. It can be 1,000 of just close to $1,000. Now what you do is you say, all right, my stop loss is $1,000. I know how much that is. Now I want to just see, where do I want to put my stop loss on this trade that I want to take? I call it an invalidation area. I call it an area where I know that if the price gets to that area, my trade will be useless and invalid, and I wouldn't want to trade it with your money. That's the area I'm looking for. I find that area, no matter what distance away it is from the cost. That's the area where I think that trade's not going to work out for me anymore. Then I work out how much is $1,000 or whatever my risk is back to cost. How many contracts can I buy? How many pips? How many points? Whatever you want to call it, whatever you're trading. How much can I buy back to cost? To make up that $1,000 risk, you work it backwards. Now you know how many contracts you can buy. Maybe it's 3, maybe it's 1, maybe it's 10. Who knows? Depends on the product. Now you've got the size of your trade. Now what you've got to look at is, okay, if I take this trade, where will I be taking profit? What's my profit target? And if a 1.1 to 1, a 1.5 to 1, or a 2 to 1 profit target is not viable, then it's not worth taking the trade. In other words, if the profit is less than the loss, it's simply not a viable trade. Its risk to reward is worthless. Walk away. Don't take the trade. But if you can see that there's lots of profit to be made on that trade, in other words, you won't be making $50 for a $1,000 loss, you'll be making $2,000 for a $1,000 loss, and it's easily achievable. It looks like, according to that chart, it will reach that target. Then that's a good trade. The basis of the principle is this. You want to know that you're going to lose 5 trades, you're going to win 5 trades. But on the 5 that you win, you want to make more than on the 5 that you lose. So if you lose $5,000 on the 5 that you lost, that's $1,000 per trade if you want to count them on my fingers. Okay. And you win $2,000 per trade on the other 5. That's $10,000 if you want to count them on my other fingers. Okay. That gives you a net profit of, on my fingers, $5,000. Just saying. Okay. In other words, you took 10 trades, you lost 5, you won 5, but you made $5,000. Does that compute? Are you hearing this? Does it make sense? Right. Whereas if you have a win rate on the other side, on the flip side, and you win 6 trades and you lose 4, how does the win rate make you profitable? Especially if you're not making more on your wins, making less on your wins. Because most people who have a higher win rate, just by the way, are taking small wins and big losses. So it never works out. So the strategy that I'm showing you is a standard strategy. But the question is, how do you manage that trade? If it goes into a loss and starts heading down towards your $1,000 loss, do not dollar cost average. Do not double the trade. Do not make the trade bigger. You do remember that when you chose the stop loss, you said the trade would be invalid there. You do remember that when you took the trade. So why on earth, if it gets to that $1,000, would you move the stop loss away? Why on earth would you dollar cost average that trade? It's losing. It's a losing trade. It's an invalid trade. Let it take your stop loss. Walk away. Next trade. We said out of 10, you'll lose 5, you'll win 5. Accept that. Just accept it. It's the way of the world. Let's say your trade goes into a profit and it goes $300 into profit. I know you're sitting there with your finger on the sell button going, oh, I got a profit. Yeah. Now I need to get out. I'm going to sell that. I'm taking that profit. And that's what you don't want to do. So just grab a brick, whack your hand, break your fingers, and then you won't be able to press the sell button. It's the only thing you can do, because otherwise you're going to press the sell button, aren't you? Or sit on your hands. That might help. I don't know. But here's the thing, guys. When it goes into profit, you don't want a $300 profit with a $1,000 stop loss. You want a $2,000 profit. So why are you selling at $300? Why are you jumping out of the trade? Wait for the trade. Let it go up. Let it get to $700 in profit, $600 in profit. Take your trade, move it up to cost, break even, or even $100 in profit. Because in all honesty, guys, if it comes back from there and takes out your stop loss, then the trade was dead anyway, gone. But then you haven't lost anything. Then you haven't paid $1,000 for the trade. You paid nothing. The trade was for free. And by the way, guys, you haven't lost $700 if it comes back and takes out your break-even stop loss, because you never got out of the trade. Funny how if you go into a loss and you dollar cost average and move your stop loss away and it goes back, gets out at break-even, you never consider that as a loss. But if it goes into profit and it comes back and takes out a break-even stop loss, suddenly that's considered a loss. Your thinking's upside down. It's the wrong way around. What I look at is if it comes back and takes out my break-even stop loss, I look at it as a relief. Like It didn't cost me $1,000. I got the trade for free, all right? Never cost me anything to be in that trade, so I'm okay. I'm good with that. I was going for the big one, but it didn't happen. That's all right. You'll get a whole mishmash of those. It's going to happen. But I mean, if you were scalping, trading in and out of those trades anyway, you wouldn't do much better, so don't worry about it. That's going to happen. And it's going to happen often, because trading is a funny game. But if it goes up and it goes through $1,000 and it starts going much higher, then you just start pushing the stop loss up behind it. I normally keep it on a trade with $1,000 stop loss. Then I'll normally keep the stop loss about $500 behind the price when it's in profit, and just follow it up until it gets to the target. When it gets to the target, I'll maybe put it about $200 to $100 behind it, because I don't want to click out on the target just in case it goes higher. If it comes back and gives me 1,900 or 1,800 of the 2,000, I'm perfectly happy. I pretty much made target. And if it carries on going up, whoa, it was worth the risk. I risked $100 to make another 1,000 or whatever the case. So that's as simple as that gets. The thing is, too many people think that when they're in a profit and it comes back and it takes it out, they've actually made a loss when they actually haven't. Now, there is the adage that the third part of my business plan is where you add to the trade. So when you're in a profit and the trade looks like another good trade, then you can double up on the trade, or you can add 20% to the trade, or you can make it bigger as it grows, like you would if you were dollar cost averaging down and you dollar cost averaging up instead. But as beginners, I don't want you to jump into that straight away. I want you to first learn to follow your trade to the win. Once you've learned to follow your trade to the win, then you can start learning to dollar cost average and add to your trade as it goes up, because the psychology behind it becomes really complicated if you don't even know how to follow the trade up and you want to add to the trade. So don't be jumping the gun too early when it comes to that scenario. The other thing I will always say to you is trade within your means. In other words, if you can't sleep at night, or if you've traded and you start sweating on the trade, okay, if you're new to trading, you'll have that problem with $1. I mean, come on, you still got to get used to it. But if you are struggling to take the trade, or you are struggling to hold the trade, or you are struggling to sleep at night because of a trade, or you're sweating when you take a trade, you're trading too big. Because it's easy to look for those big profits, but the big risk comes with it. And your brain needs to be able to absorb that big risk. So I will normally recommend to you guys, start small, trade really small, trade in a comfortable area, almost like you were on a demo account, and it really doesn't matter to you if you lose $5, so be it. Get comfortable with that, and then start growing your account or increasing your trades as you become more comfortable with your trading amounts. Just don't get caught up in, I've won 5 times, and then start throwing the kitchen sink at it, and then it bites you once and it destroys your psychology. Just be careful of that. Don't jump up too quickly. Take it up in slow increments and grow. So I hope that helps you guys. I want to thank you guys for watching. Do come back and watch the last videos I've got videos about investing there for you. I've got videos about strategy there for you. And I've got so many videos about different strategies and systems. Come back, join us for the live show tomorrow. Come and trade with us. Come and choose your trades on the platform, and let's have a little bit of fun together. Thanks for watching, guys. And until the next video, which will be on Wednesday, besides the live show tomorrow, cheers, thanks,